Hello everyone, welcome back to another episode of the Virtual Bacon Show. Today we have another episode of Market Insights where we will be going over Bitcoin analysis, Ethereum analysis, Bitcoin dominance, as well as a bunch of altcoin alpha that's coming up in the next couple weeks. Before we get started, make sure you hit the like button, and wherever you're tuning in, consider subscribing to all of our channels and check out the rest of our social media on Twitter, Instagram, YouTube, and Discord in the show notes below. So let's get right into it with Bitcoin analysis. The key support level for Bitcoin is still at 18.5K. As long as this level holds, Bitcoin has not broken its previous lower low, which means it is currently in a sideways chop period and the downtrend does not continue just yet. The first significant resistance is right around 23.5 to 24K. This is a confluence area between the 200 weekly moving average, this curvy blue line, and the previous high we made in the first week of August, right at 24K. In order for a significant uptrend to come back again, Bitcoin needs to break above 24K, which would form a new higher high above the previous high at 24K. And this would also complete a double bottom pattern, assuming that the 19K support here holds. Of course, this is speaking quite ahead of ourselves. If 19K support doesn't hold, none of this makes sense and the downtrend might even continue. The most important thing right now is for us to see a bounce from the 18.5K to 19K support level. Moving on to Ethereum, it's been 2 weeks after the merge and ETH has actually been going sideways and looking stronger than Bitcoin. You can see Ethereum is still quite a ways off from its key support level at 1K, whereas on Bitcoin, it's already flirting with that 19K key support level. The key support level for Ethereum currently is at 1K. This is the previous low we made in 3 times in June, and this support level needs to hold in order for Ethereum to continue at least in its sideways movement and not for a downtrend to continue. The first key resistance level for Ethereum is at $2,000. This was the previous high we made in August, as well as dating all the way back to summer of 2021, where it was tested 3 times as support, and February of 2021, where it was tested as resistance. So this is a very significant long-term level as well. In order for any sort of long-term reversal to come out for Ethereum, it needs to first hold and bounce from the 1K key support, where then it would make essentially a higher low here, and then it needs to test and break above the 2K resistance. This would print another higher high similar to Bitcoin's chart, and this would essentially signal a new uptrend. Of course, also not to get ahead of ourselves here, the most important thing for Ethereum right now is to hold above that 1K key support and not break below it. Bitcoin dominance is showing a clear risk-off cycle starting. Monitoring this long-term channel for the past 15 months for Bitcoin dominance, we see that whenever Bitcoin dominance touched the bottom of this channel, this key support, it quickly bounced from it. And the 4 times that it touched the top of this channel, it was rejected and turned into a downtrend. Because whenever Bitcoin dominance trends down, it means there's an alt season. And whenever it trends up, it means it's the reverse of an alt season and it's a risk off period. This essentially gives us very clear multi-month risk on and risk off cycle signals. Every time Bitcoin dominance touched the top of this channel, it triggered a risk on signal, which means it's a really good time to enter into risky positions, altcoin positions. And each time it touched the bottom of this channel, it triggered a risk off signal, which is a optimal time to exit the market, to sell your risky altcoins and go back into safer assets like Bitcoin and Ethereum. These cycles have lasted anywhere between 2 months to 6 months. So I'm expecting the next 2 to 6 months to be a bad time for trading risky altcoins, and I'm staying heavily in Bitcoin and Ethereum. Moving on to market insights. First, we have Atom 2.0, which was finally revealed at Cosmoverse just yesterday. The whole vision for Atom 2.0 is to really revamp its tokenomics and truly align the adoption of Cosmos technology with the price appreciation of Atom coin. In other words, Cosmos and Atom will finally have Ponzi-nomics. Here are the 4 main features summarized for Atom 2.0. First, we have liquid staking, which opens the door to zero inflation by removing the need for security subsidy. Essentially, all that inflation of new Atom coin used to go to subsidizing validators and stakers. But once liquid staking comes out, because the cost of staking is much lower, you no longer have to lock up your Atom coins. That extra subsidy can be removed, and eventually Atom wants to achieve zero inflation. Secondly, we have interchain security, which accelerates the Cosmos expansion by facilitating the onboarding of new chains while generating value for Atom stakers. Essentially, it makes starting a new chain much easier using the Cosmos stack by borrowing staking power from Atom stakers. And in exchange, Atom stakers get the new chain's native coin as rewards. Number 3 is Interchain Scheduler. This brings cross-domain MDV on-chain and makes Atom the settlement asset for the IBC economy. Lastly, we have the Interchain Allocator, which accelerates what they call the Atom Economic Zone, and this will make Atom the index token of all of Cosmos ecosystem. Once this gets implemented, for each new Cosmos chain that pops up, it benefits them for their treasury to buy up a bunch of Atom coins and hold it, and in exchange for the main Cosmos hub to hold a bunch of this new chain's native coin. So this introduces a lot of joint buying pressure between the projects. As you can see, all of these features are focused around bringing value to the Atom coin itself. This is likely to be one of the biggest upgrades in Cosmos history over the past 5 years. Highly encourage you to read more about Atom 2.0 on Twitter to get an idea of how big this upgrade is. Next up, Axelar, the AXL token, is finally live and trading. Axelar is one of the largest projects doing cross-chain interoperability. It's also not just a token bridge, but rather you can build cross-chain smart contracts with parts of your app running on Ethereum and other parts running on Cosmos or any other chain. The main alpha here is that Axelar had a private sale round at $1 per token price. And this private round had huge investors like Polychain and Dragonfly. But because we are in the bear market, Axelar is currently trading at 80 cents, a 20% discount from the private round price. Based on those numbers, this is actually a good deal. You're effectively getting cheaper price than large VCs, and your tokens are tradable, unlike VCs who are locked for multiple years. Speaking of interoperability, Synapse is another project to watch. Initially, Synapse started as only a token bridge between multiple EVM chains. But recently, they announced that they're building their own chain called Synapse Chain. This is a full interoperability protocol which aims to become a single execution layer for multiple blockchains. With the launch of Synapse Chain this year, they are moving to support general-purpose cross-chain dApps. The interoperability narrative is moving from bridging tokens to more complex cross-chain applications. Definitely watch out for the top protocols in this space. The main players are Layer 0, Synapse, Wormhole, Hop Protocol, Multichain, Axelar, and Stellar. Next up, the original Ethereum killer, EOS, is getting a major upgrade. Funny enough, this upgrade brings them the Ethereum virtual machine, the EVM. This is called Trust EVM, and it will allow any user to use MetaMask on top of EOS and deploy Ethereum-based smart contracts. If you used EOS back in the days, you know how painful the account system is. You even need to get an invite from one of your friends to even get an EOS wallet. This new EVM environment is a really welcoming upgrade. This upgrade is led by EOS Network Foundation. It's a spin-off entity that has taken over development for EOS. The original company behind EOS, Block.one, has faced a lot of backlash after they took the $1 billion that they made in the ICO and basically stopped working on EOS Network and instead transitioned into an investment fund. Lastly, as of last week, EOS has officially been taken over by its community. The ecosystem has formed a EOS.io coalition, which consists of EOS Network Foundation, the new spin-off, Ultra, Telos, and Wax, 3 of the biggest ecosystem projects within EOS. As these teams are genuinely interested in the success of EOS, hopefully it can finally generate some more traction. Last bit of alpha, if you are into NFTs, you've probably heard of SudoSwap over the past couple months. In a nutshell, SudoSwap lets people deposit their NFTs into a liquidity pool along with some Ethereum. This works similar to Uniswap and it allows anyone to instantly buy and sell NFTs at the floor price. This way, you don't need to manually create bids or offers on OpenSea, and you can buy and sell large batches automatically. This is a truly unique project, and their token launch plans came out recently. SudoSwap's token ticker is SUDO, and it has a very fair token launch plan which we can all participate in. The main takeaway is 42% of all SUDO tokens will be given to XMON token holders. XMON is an old NFT project built by the SudoSwap founder, who also goes by the name 0xMons on Twitter. It has been revealed long ago that Sudo tokens will go to XMON token holders. And now that the official news is out, we can calculate the specifics. The circulating market cap of XMON will be eligible to claim 42% of Sudo tokens. So if we take 50 million divided by 0.42 or 42%, we get roughly $120 million in fully diluted valuation for Sudo tokens once it comes out. This is pretty decent for an innovative protocol like Sudo, especially given there's no VCs to dump on you. These guys never raised any money. All of the tokens are going to either the team, the treasury, or the airdrop. So if you want to participate, just buy some XMON at a price that you think is fair and wait for the Sudo token to release. That's it for this episode of the Virtual Bacon Show. If you like this content, make sure to subscribe, leave a comment, and share it with your friends. And I will see you guys in the next episode. Cheers. Bye for now.